shall all pass away. Ah, but there is something about that name. Come on, tell him. Come on, tell him. Say, Jesus. Hallelujah. Jesus. There is something about that name. Master, tell him, say, Master, yeah. Savior, like the fragrance after the rain. Kings and kingdom, kings and kingdom shall all pass away, but there is something, thank you, about, hallelujah, that name. Come on, tell him, tell him, oh Lord. Oh, we bless your name now, God. Oh, we give your name the glory. Oh, we give your name the honor. Oh, we bless you right now, oh God. Oh, we bless you right now, oh God. We magnify you right now. Oh, thank you, Lord. Thank you. Oh, Lord, thank you. Come on, let's just start giving him some thanks. Come on, let's just start giving him some praise and some honor. Father God, in the name of Jesus, here we are tonight again. A time, oh God, when in the midst of everything that we are experiencing, that we could be like others. We could throw in our towels. We could come and say that there is no God. We could come and say that it because of us, because of our goodness, because of our intellect. But tonight, oh God, we worship you and we magnify you and we give your name the glory, because now tonight we thank you for everything. We thank you for healing. We thank you for deliverance. We thank you for what you have done. We thank you for what you are about to do. And God, because of that, we bless and honor your name. And we ask you tonight that you now would look over this country, look over this land and country. So many want to tell you thank you. Those who come in ICU, those, God, who are in surgery recovery, that look up and say, if it had not been for you, they're telling you thank you tonight, God. And we thank you on behalf of those who cannot even speak tonight, because grandmama said, if I couldn't say a word, I'll just wave my hand. We wave our hands tonight to you, oh God. We wave our hands in the sanctuary. We wave our hands in our several homes. We wave our hands to you. We are saying, oh God, to have your way, because there is none like you. And we bless you tonight as we've come to you, because we know beyond everything that we can't make it without you. So have your way tonight, oh God. Have your way tonight, oh God. Have your way all night, oh God. Have your way tonight. And we are careful to give you the praise. In the name of Jesus. Amen and amen. God bless you tonight, and thank you so very much for being with us tonight. We mix things tonight. We mix our prayer still with our abilities to come and to try to be what you, oh God, would have us to be. And we come tonight because tonight it's a strange atmosphere amongst everything that's going on. Yes, because everywhere you look, people are screaming that everything is okay. Some have gotten the stimulus check. Some have set up and they have seen their businesses expand. They've seen their stocks and their bonds. They've seen all of these things. They've seen them make what they claim is a lot of money, good money. Tonight, we're going to talk about some things today. We're going to talk about, what is considered a good investment strategy. Because, see, a lot of times, I know that you have people that, if it's not what they would seem to believe that it should be, they throw things and say, "Oh no, we can't make it." Well, tonight we're going to talk about some of the things that I think have been for us. They have been good strategies, and then they've turned around and they've not been such great strategies. Because the other day, there we were. Now, many of us, we've trusted Coinbase for everything that we've done. Now, Coinbase is doing what is called going public. So now all the places that we are finding as our places to hold things, we call them our repositories. We come to find out later on that these are just great big money-making things. And then we look, Robinhood, one of those great places that claim to be for the people, by the people. Then all of a sudden we find out that Robinhood is a multi-billion-dollar enterprise. A few months ago, there's this stock called GameStop. Robinhood was trading it. Then all of a sudden it decided that it would no longer trade the stock. In the midst of everything, people were buying and trading, and they were finding out that even a place like Robinhood, who claim within all their fine lettering that we're the little guy, we're not like Goldman Sachs, we're the little guy, we're not like Merrill Lynch. We come to find out that all of these places, they are the same. So when you start now tonight, we're going to start considering just a couple of things. First, we're going to start looking at what we would call an investment strategy. Because I'm telling you now, things are not going to let up. They're not going to stop. They're not going to cease and desist. What is going to happen is that more and more and more, you're going to keep feeling overwhelmed. And see, when you start feeling that you're overwhelmed, what will begin to happen is that you'll start believing that there's no reason for you to continue any type of trying to make monies or trying to make a strides, because you start feeling overwhelmed. Now, for instance, on a whiteboard, if I wrote up on a whiteboard what something like, say hypothetically, we would say Bitcoin. Now, when Bitcoin came around, every time you look, the newspapers, they were all saying, "Oh, Bitcoin is not a great investment, and you shouldn't have your money in Bitcoin." Then now, with Bitcoin being at the price that it is now, it makes everyone feel as if that Bitcoin is at $61,000. So all of a sudden, when you look and you're saying, "Well, how do I develop an investment strategy based on those things?" Well, Tesla. Last year, all up and down this time, Elon Musk, right around Easter, was talking about that he was thinking about going bankrupt. And Tesla's prices, they were going down, 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 down. And you start looking and you said, "My goodness, If Tesla is doing that, then what am I going to do? Um, then you start looking and you start trying to see how do I develop an investment strategy, because every time you look up, you can't have a strategy that you can't have strategies that do not take into consideration your own idiosyncrasies. Yes. So you can't have a strategy that only takes in when things are going well. You have to have a strategy that takes in the fact of when things are not going as well. There's an investment strategy for Bitcoin. There's an investment strategy for retirement. Some of us, we're already at that age of retirement, but I want to talk a little tonight, just based on those types of things, because you can't stop just because somebody lost money, or someone things didn't go as well as they should have gone. You can't base what you are doing on those things, because if you base what you are doing on those things, then what will happen, and it is going to happen now, what will happen in this 2021, if we base our strategies on situations that are not, you say, 100%, you will never ever see. First, you aren't going to see any double-digit savings accounts. Gone are the days where I could put my money in. I could put my money at the bank, and everything that I'm doing, it would turn around and say, "Oh, you're the best. You're the best." And then you got to think about secular growth with reopening things. Yes. So anytime you are seeing these things, the only way that you are going to see them is, excuse me, beyond everything, you're going to have to take in that unemployment isn't over. But you also have to plan for when unemployment goes down. Then you have to look at those things about all of the things that the economy is doing. And let me tell you something. This is a major economy. This is not. This isn't. This isn't something where here I am saying, "Look, you can make this." No, what this is right now. This is trying to understand that we're not playing checkers. No. We're playing chess. Oh, yes. And all the people who are around you, the ones that run the financial world, we call them Wall Street. So one of Wall Street's most prevalent investment strategy is when they turn up and they say, when we look to 2021, we have to look at it through a different way than we did in 2020. And last year, the stock market was in what is called a bear market. And the Dow Jones Industrial Average had its third worst session in history. First of all, the stock market in March, April the 16th of last year, it was on a 12.9. When you say a 12.9% decline, the stock market lost about right at 4,000 points. And then in the next 6 weeks, coming around towards the April-ish, headed into May, the stock market lost 37%. And then all of a sudden, it bottomed out. And what began to happen, the billion-dollar players, they start to question themselves in rooms down in Florida or in Arizona, places where they believe that the coronavirus could not get them. And they brought in their best traders, their best strategists. And they started saying, what are we doing? So they started investing in the tech stocks that needed this type of environment. For instance, last year in March, Netflix was trading at less than $50, because who really had the time to sit and flick through hundreds of thousands of movies that Netflix has, the TV shows. But then with us sitting home, Netflix becomes what is needed and necessary to keep us from just going off and like jump out the window. That was figuratively. Zoom, something that basically always had glitches, still does. But last year in March, Zoom was $18, $20. And then here it is a year later, Zoom's $500, Netflix $400 and something. So everything that we were seeing was that all the vested playbooks, they had to be adjusted for what is called a COVID norm. And here we are today, because some of us, we still believe that all COVID is something that is going to be here for, you let us tell it, or you let the prophets tell it. COVID was only supposed to be here for 3 months or 4 months. COVID sank Donald Trump's legacy. COVID has closed millions of businesses across this country. COVID has unemployment the highest it ever been. COVID has made this government invest trillions of dollars just to keep the economy afloat. COVID has made being a doctor premium, being a nurse golden. COVID have us using words like first responder. COVID has us sanitizing. COVID has us doing these things, and some of us still have not adjusted our spending habits towards COVID, our investment strategy, taking into consideration COVID. But then many would say, well, Pastor, everything has looked better since the beginning of COVID. Yes, but did you adjust? The Dow, it recovered in November of 2020. And the past few months, only thing the Dow has been doing is going higher and higher. What the economy has been doing, the economy has been healing from COVID. And every once in a while, some silly governor from Florida, some silly governor from Georgia, they'll get up and say, or some silly governor from Texas, they would get up and say, we have to open up the restaurants, we have to open up the barbershop, we have to open up the massage parlors, we have to open up the spas, all because these are the places where normal people spend the majority of their money. They want to open the malls back. There are people who have to be in the mall. And all of this because we look up and we think that the economy is back, but we're not there. The unemployment rate is the highest, far above pandemic levels. And they are saying that we won't truly recover to 2022 to 2024. And we might not recover until 2024 or beyond. Weekly unemployment claims, they're high. And Americans, though they're being vaccinated, we still had 556,000 deaths, according to Mr. Fauci, by Wednesday of this week. I didn't count beyond that. And so the warmer months, this $1.9 trillion stimulus plan, direct checks, the optimism about the economy, many people believe that we're going to recover. So inflations, many people not even looking at inflation. But as an investor, how do you go about these things? How do you go about these things? First of all, there's two things. One, we have to look at, for the rest of this, we can't just see ourselves doing things in the same manner in which we did. Number one, if we look up and we start trying to do the heavy lifting, and that's what many of us, that's what we've done. We tried our best to do the things where everything that we are doing, we're looking at the two extremes of the risk spectrum. So one thing we try to do is that we try to pair high risk investment with no or low risk asset. So for instance, when Bitcoin was hovering small, many people were listening then to CNBC telling you how risky it was because there were no government controls. So when you start looking at that, you're looking for a risk spectrum that takes a high risk and a low risk asset. And when you try to do this, you're looking at things like IT, healthcare. And when you look at these things, you start saying these are stable. These offer some type of growth. But then when you look at the IT stocks, what they do is that they come out like consumer staples. They are software. They are things that corporate America really needs. And then it was hard for them to cut these things. And then you'll say, what do you mean? Well, see, if you're doing the barbell, if you're saying, I'm only going to invest in high yield but low risk, then you're looking at things like you're investing in Blue Cross Blue Shield, your Humana, your United Healthcare, North Wales. You're investing in things, Moderna, Pfizer. You're investing in things that you're saying that the exposure is good at. There's good prospects for some innovation. And then you start saying to yourself that you're poised to benefit from all of the long-term demand, because many people will look at healthcare, they will look at IT stocks, things that corporate America cannot do without. For instance, there's a company called Salesforce. before COVID. Salesforce was about $10. After COVID, 100, 300. Shopify, 500, 600. Before, $40, $45. GameStop, $12. Last, 180 something dollars. Because these are the things that are geared towards the younger population. And because it's geared towards the younger population, this is what you're looking. We spend, as older people, more money on healthcare than the younger population. But then every time you look up, there are more investments in these sectors. They were temporarily hurt by they were temporarily hurt by COVID. But the problem that happened is that by them being hurt by COVID, you can find a couple of things. Number one, you can find those things that you definitely cannot say that you find yourself not benefiting from. You could see this. You could see these things, and then you can look at them and say, "I got this under control." And you got all of these things under control. But then what begins to happen? You're saying to yourself, "What am I to do?" Well, if you're looking at that, you got to find companies that offer a good risk potential, and they have to have a good reward potential, and they got to have room for recovery, because everything that you are seeing is that the economy is definitely becoming much better. And you cannot just say it that this has become better because of one or two things. You have to look at the fact of low risk, high risk. But it's high risk. Yeah. Come on now. You look at something like, if you're really investing in Bitcoin. Earlier this week, Bitcoin was in 70,000. Bitcoin today is at 61. Earlier today was at 58. You have to have a great stomach for things like that in order to see yourself saying to yourself, "Oh, I can make this." Now, every time you are seeing this, I need you to come over. Let's look at a different type of strategy and financial strength, and things where you look at how the stakeholders and their leadership, those together, powerful combination. And then you have to look at, number one, competitive advantage, and how you are looking for things that can lead to better sense of better sense of performance. So now you're focusing on environment, social, and corporate governance. And when you start focusing on those things, you find yourself having a different type of advantage. Thank you. With that type of advantage, the only thing that you can do beyond that is that you can see yourself being placed in some type of long-term investment that creates for you not a safe strategy, but a strategy that is not one where all your money is always at risk. Now, what am I trying to What am I trying to get to there? Well, when people manage large firms, first thing when they start investing, they look at what do you do for an environment? What do you do on a social level? What do you do on a corporate? What type of things do you have in place that the CEO cannot do? Elon Musk, where all of a sudden he goes from claiming he's about to file bankruptcy to being one of the richest men in the world. Well, those are the things that leads to this corporate type of responsibility. So if you are that kind of person, you will thrive in this environment because the Biden administration will always be one that will be concerned about the environment. They will be concerned about our Secretary of Interior. Oh my goodness, I was crying because she had gone out to the areas out in Utah. Then she went to Nebraska. Then she went to places where no one from the Trump administration would have ever gone, because to them, those places are not necessary. So she went out to these places and she was showing us the beauty that is still inherent in the United States. But then you come back to the totality of the Biden administration, and it's talking about the environment, social, and then the things that people got away with during the Trump's administration. No, they go to prison in the Biden's administration. And so you're seeing even there, that is one of the reasons to many people that Bitcoin has not just taken off and just gone to the stratosphere, although it has. But people will not be able to say, well, you just risk your money, because what Mr. Biden is expecting those who are marketing the Bitcoin is to have some type of stewardship. Look at the pandemic now. It's everything about the pandemic. It's lasting impact. These companies think about diversification, sustainability. They're looking at their global supply chain, and they're looking at their manufacturing base. And see, before COVID, you didn't have to divulge these things. But then during COVID and after COVID, people want to know, McDonald's, where's your beef coming from? People want to know, Deutsche Bank, we know you're based in Germany, but where did you get your money from? People want to know these things. And when they see these shifts, what they are trying to do, they're making these shifts based on, thank you, they're making these shifts based on those things. And when they make these shifts, they're not making these shifts based on the fact of saying, look at me now. Look at me. Oh, they are saying, show us transparency. Don't show us where you want us to look, but let us look everywhere. So the stewardship, we look up and we're responding to these potential shifts, or we're looking at these dynamics and they're comparing them to the market. And when you do that, you look for skill management teams and you look for an engaged board of directors. And then when you're monitoring those things, that's when you sit there and you'll say, well, who took over behind Bezos at Amazon? Who is this fellow? Who took over? I know you said Steve Jobs, Apple's been a long time, but then you're saying, well, what is he doing? Where is he making his money? How are they doing? Why are these companies moving from Silicon Valley? Why are they moving to Austin, Texas? And then you start looking at these things. What's his buyout? What would happen if the company reaches a certain plateau? And when you're asking these kind of questions, could I tell you, these are AOC type of questions. And these are what Bernie Sanders was asking 15, 20 years ago. But now the audience is listening. So when you start looking at this, what we call ESG, environment, social, we want to know how you're doing for the social, how you govern, because everybody want to know, do you have any social policies? You know, companies come on TV talking about we support Black Lives Matters, and you're like, another company comes on TV saying, so sorry that 200 years ago we participated in the slave trade. You say, whoa. Then you come back and someone comes up and they'll say, none of our clothes are made in sweatshops in Indonesia or India. And then you started saying, well, how do we monitor this? So every time you look up, before we do things, we use what is called a conscious decision. So before an investment strategy based solely on high risk and low risk, you know, like you're in the gym exercising, then you come and then you have a whole investment strategy based on the idea of number one, what you do with the environment, what you do on the social, who governs your company. So when you start doing that, now all of this has an effect. And then you start looking at, compared to the market, you got to look at a premium on the skill management team and an engaged board of directors. And when this is in place, these are monitored. And then you start saying, you say, well, where do you find these? If you went to Standard and Poor, or you would go to any of the Yahoo Finance and even on Google Finance, and you start looking at these things, they will tell you where these companies that practice ESG, where they are based and who they are. And then when you start doing that, it will start saying, can you be flexible? Can you put money with these companies? Can they be adaptable? And can their leadership be trusted? And in all of this, they are calling you a stakeholder. They're asking, will they make decisions that benefit the stakeholders, or will they make decisions that benefit themselves? You know, this is one of those that many people who learned to invest in the 70s and the 80s, that's a hard pill to swallow, because this is like a virtuous cycle where you're taking highly profitable companies that might out earn their cost of capital. And then they sit there and they are able to embrace a world-class ESG practice. They've already made their money. So it's all right for Procter & Gamble to come up and say, we practice diversity. So they'll do a commercial. White couple. No, white black couple, white Chinese couple, male couple, female couple. They can do this because they've already made their money. They can have a man talking about his princess and he's home all day with the young girl and she's a superwoman, but she also gets dirty, but he puts her clothes in tie. And no one is upset about that because Procter & Gamble has already laid so much groundwork for that. But some young company that will come out and do that, and their stock might take a big hit because the evangelicals, the ones that even now they are the ones who are claiming that God has led them against taking the vaccine. Johnson & Johnson, 6 people developed blood clots. And there was so much chatter. 6 million people had taken the vaccination, the Johnson and Johnson's vaccination, and 6 people developed blood clots. It was enough to shut it down. Because see, what they're doing in shutting it down, the only thing they are trying to do is to make you see these things in such a way that that all you can do from there is look at these strange things and say, how do we make them work? And then what Johnson and Johnson, what they are doing is that they are making you see these things and making you say that these things, they won't work. And they won't work because everything that we are doing with them, they are forcing us to have a different sense. And since they are forcing us to have a different sense, we can't just jump on them, because if you jump, people will say that you're being this or you're being that. And because they are saying that you are being this or that, you're in tough shape. And because you're in a tough shape and things are working in that way, you are definitely having what many people call a good day, or some would say that you're not having as great a day. And because you're not having as great a day, you cannot, whatever you're trying to do, you cannot make those things work in the same sense that they were working. You have to turn around and you have to see these things, and you have to see them in a different way. And that's what we're trying to do tonight. What you're trying to do tonight, you're trying to develop and try to see what type of strategist that you are. See, so now let's see this. So because see, when you are doing things or practices that enforce the sustainability of profits over the long term, you're one who looking, and I hear you all the time now, you call yourself a responsible investor. And there's nothing wrong with that. But now don't be angry with people who basically are in it for the money. And then another strategy that many people use, they try to use protection against inflation. And now this is a hard one. Everything that you're doing to start the year, everything about the markets, everything about the U.S. market, the rates had shifted higher. And one of them that helped it was the Georgia runoff election, because it raised the idea that there would be more fiscal spending. And a lot of times I'd be afraid to talk about politics because you'll say, oh, no, what policies are he pushing? No, it's the fact that every time you look up, when you see all the health crises have passed, and you're seeing that this should lead to the market, in a way, the market should come to a situation, because it's making adjustment for what we would call the monetary policies by the Federal Reserve. You start looking up and you start saying, what are you afraid of? Then all of a sudden, the person would look up and they would say, I thought once we started taking the COVID vaccine, or once we started having these things, that inflation would, that spending would go up and inflation would rise. But then all of a sudden the feds come and they respond to this new dynamic, and they are aggressively looking and saying the market is anticipating this. But then when the market corrects itself, or when the market looks up and tells us, now speaking of the market as if it's a person, but it's a behemoth. And it speaks to us and it claims I need to 2024 to get to the place. So then some of us will say, well, I'm going to wait until 2024. But when you get there, possibility Bitcoin will be $150,000. When you get there, there will be so many stocks past $1,000 a share that you would need anywhere between $50,000 to $100,000 just to be a mild market person. And so all of this is crazy. So look at here. So you're looking at these short dated rates. That's what the 1.7% mortgage rate, or then you're looking at this and then you're combining it with these long pulled out weighted average maturity of treasury debt. All of this is happening right here in 2021. They're stretching out debt. And what some people are doing, they're still buying treasuries. What some people are doing, they are saying the U.S. yield curve that is steep. And you say, well, what do you mean? At the steep of the yield curve, many non-U.S. investors, they find a meaningfully higher terms than they're likely to get from their own bond markets. And so when they do this, they start hedging out the US dollar exposure. Now, let me see, can I speak English now? So here it is, a foreign investor who is in Italy. And Italy economy now is almost panned. But the person still is rich. They still have money. So they come and they buy in the US market, where our administration is pumping trillions of dollars into our economy. At the end of COVID, we'll probably owe $6 trillion. And no one is going to sit there and say, Mr. Biden was fiscally not irresponsible. No one is going to sit and say that. Some are going to say he saved our country. That's who they should give a Nobel Peace Prize to. They should say to him, for you to be willing to twice within 7 or 8 months sign into law $1 trillion bills. And then all around the country, people will say, I'm not investing in the United States. But all outside of the country, people are looking up and they are saying the yield curve for U.S. debt is very high. Because the U.S. was trying to pull away from borrowing money point blankly from China. So instead, these non-U.S. investors, they are seeing this as a premium. So they are hedging out the U.S. dollar exposure. They are saying we could compress the U.S. term premium. But then when you look at that, the economy, depending upon the direction, depends upon how the rate will have an outcome. So with these inflation protected securities, and then their underweighted duration exposure, then we go deeper and deeper into 2021. So what is happening in 2021, if you're hedging against inflation, then you're playing the bond market. That's all that is in English. You're playing the bond market. So then you're buying, no, not savings bonds, but you're buying Vanguard, you're buying Fidelity. But then instead of saying put it in the stocks, you said you put it in debt. Because all you're trying to do is that you're looking at all of these things. Then we come and we look at industrials, we look at clean tech, we look at financials. And when you look at these things, you start trying to see how can you get away from thematic disruptions. For example, every time you look in 2020, we saw all these lifestyle changes. And when we saw these lifestyle changes, like, can you imagine a classroom totally on Zoom? Could just 5 years ago, if someone said, I got a degree from Phoenix, University of Phoenix, somebody said, oh, you're UOP? Oh, you got your degree online. It's not as prestigious as having a degree for someone who goes sit in a classroom. Then all of a sudden, you're in a situation where you start seeing things in a different way. And when you see them in a different way, you start asking yourself, how do I handle that? And then since you're trying to handle that in a different way, then you start asking yourself in a different manner. Number one, you start asking yourself, how do I not allow these thematic disruptions that took center stage in 2020? And when they took center stage, I had to not only adapt certain technology, but I also had to have a lifestyle change. So everywhere you look, the economy has had a weak start, these broad markets in 2021, because many people were using thematic investment strategies. And sometimes these industries, these sectors, every time you look up, you're seeing these investment themes. For instance, everybody was screaming, when is Walt Disney coming back? So Walt Disney is saying, oh, we implemented face recognition technology. And I'm saying, why? There's nobody at the theme park. But see what they're doing, they were not speaking to me. They were speaking to those people who bought Walt Disney shares. See, they were speaking to those persons who were still investing in Norwegian Cruise Line, still investing in American Airlines, still investing in those things, AMC, the movie theaters, they're still investing. So that's who they're talking to. They're not talking to people who are not a thematic investor. So you could have a strategy that you could fill up your portfolio right now, and everything in your portfolio could be related to popcorn. Everything in your portfolio could be related to travel, could be related to amusement parks. And no one would look at you and say that you have made a bad decision. Because when you start looking at industries that the industrial, the financials, this is the thing that you start seeing. And you saw with the U.S. economy that what many people believe would make the economy come back would be getting people out of the house into the bowling alley, getting people out of the house. We're taking pictures again. You just can't stay away from Las Vegas, Nevada. And I tell you, I believe if COVID was rampant in Las Vegas, no one in Las Vegas would tell that. Just like for so long, even during spring break, the rules that were being implemented, that they were saying that some of the people came to Florida already pre-COVID. I mean, already with the COVID virus. And so they couldn't count that they got it in Florida, all to keep the tourism up. So anywhere you're seeing this, you're seeing them asking, they need a disruptive technology. They need a technology that the risk is for a more protracted recovery. So everybody's claiming, now this fits stay at home, the momentum to stay at home. So all the stay at home things, this again is industrial, this is clean techs, these are the financial, cloud computing, cybersecurity, and telemedicine. So if you're sitting there saying that I'm interested in telemedicine and the vaccine, it's going to reopen the economy in the second half of 2021. But the behavioral change that the world is undergoing will persist long after the virus threat subsides. Some of us are still not going to rush back to the office. Yes, some of us are still, we aren't just going to rush back. So from an investment standpoint, the infrastructure bill is passed. A lot of the industrials, they're going to reap most of the reward. And what they're going to do, they're going to use this, especially automation. You know, everybody is screaming. They want a car that drives itself. Now, for me, that's a scary thought. But in most of the TV shows, you always will see a Tesla on automatic pilot going down the road 70 miles an hour. You're like, are they going to live if, you know, this person wakes up and finds out that, you know, he's still doing, but then it has automatic brakes. It has all of these things that someone will say, I'm looking for this type of automation within my investment strategy. And so the investor, they look for stocks or they look for ETFs that cover companies in the infrastructure sector. And they look for companies that are in the industrial automation space. And when you do that, what the Biden administration has done, they are focusing on sustainability. And when they're doing that, they are also putting in massive amounts of fiscal stimulus. And so you have to stay, if you are that kind of investor and you are developing that kind of strategy, no, you're not the one look at high and low risk. You're not the one that will look at things like, am I one who have to see what do you do with the environment? What do you do for governance? If that's not you, then you come back. And then we're in this fourth stage where we're saying, here you are, you're looking for sustainability. And yes, you're looking at this, we're looking at these sectors of the economy that kind of lagged during the recovery thus far. And so the administration is focusing on considering clean tech stocks and funds. They're saying that stocks that did very well before COVID have been able to maintain, even if they have lost some ground, but they still have been able to maintain, they're investing money towards them. And so then like the financial markets, they're rebounding. And when they rebound, what's going to happen? The rates are going to rise. As you're seeing the banks are making money. And so now did you notice SBA, they send you to do the PPP at the bank. They can handle it, but they know that you go there, got to give the bank a little piece. So now the banks are bragging about giving 2,000 people of color a loan. Maybe it's $10,000, $50,000. They don't care. It's a loan. They make their fee and they're done. So within the financial, they want increased consumer spending. They want economic activity. And because this will benefit consumer-focused banks. And so most banks are currently well capitalized. They have strong balance sheets because what the government has done, the government has mandated stress testing. And that's the thing. So now when we look at this, and then I'm gonna try to close out a little bit this evening, because you have to look at secular growth. Now don't wave that out, because a lot of people are saying that every time you look up, you got to keep that in your portfolio, because a lot of people saying, oh, look at the small cap. That's anything, a few $1 billion or less. And they are saying all of this pandemic is receding. The economic reopenings But people have to think about they cannot just get away from growth, and they have to future-proof their portfolio against all of this transformational change that has become critical. And they should not bet against innovation. All of us who betted against Tesla, yes, we lost. Some of us got on Tesla because he was splitting it 5-1, or 4-1, I'm sorry. So that made it great. But my goodness, can you imagine if you got into Tesla 2017, 2018? Oh my goodness, you've been at $40, $25. Then all of a sudden, it went to $2,000. Now it's $800 a share, but you got 4 shares. So it's actually a stock that is trading somewhere near almost $4,000 a share. Woo, Lord. So everything from 2020, you got to look at the power of the technological innovation. See, all of that. Look at them vaccines, that mRNA technology. That would have taken 20 years if it hadn't been an influx, $750 million worth of government money. And look at the doubling of e-commerce sales. Right now, Amazon can't keep up with the amount of business. And a lot of people are not going back to going into a store when they could get online and do all of those things. So across 2021, all of these investment strategies, they are pairing secular growth with the reopening themes. So many people are saying the on-time retailer, they are not going to sit down and say, well, once we reopen, we're going to stop ordering. No, unemployment is going to go down, and the consumer is going to do well because they're going to have online, they're going to have in-store, they're going to order from the restaurant online, going to go in and eat. Everywhere you look, a lot of churches are saying we're never going to go back to just in person. Now, you as an investor, so your strategy has to take into consideration which of these companies are going to be able to sustain that. And that's where you're talking about your reopening. So look at the secular growth, cybersecurity, pet care, remote work. All of that has to be with these reopening themes: infrastructure, automation, small cap. And you cannot get away from this. Oh my goodness. One of the scariest things was thinking about your cat or your dog subjected to COVID. And there was a lot of research going on saying, no, they can't do it. No, they can't do it. Then you look at renewable energy, marijuana, video games. Oh my goodness. All of this is we're looking for these themes for 2021. And many people say renewable energy. Why? Because there's a new energy game, solar, batteries, and that's not changing. Tesla was out there by itself claiming electric cars. But there was other companies with electric cars, but no other company like Tesla, where the only thing they made were electric cars. And now all of these companies in the new field that are renewable energy, most of them are based in the United States, but they're higher evaluation. They're higher valuations. And you say, why are you saying that? See, when you look at NIO and you look at all the companies, even the e-tron with Audi, Mercedes-Benz is making a electric car. Well, they have already had some, but now they're making total electric cars. Fiat, even the Maybach has an electric portion. And you're saying, wow, because everybody's looking at renewable energy. So this brings a higher valuation on a traditional view. And when you look up, you're saying, what are you paying for? Well, you're paying for the growth. and you're paying for the growth of a whole industry. So the renewable energy industry, we're paying for that growth. And since we're paying for that growth, we're looking at that. Now, cannabis, no matter how much I'm trying there, the legalization, it is spread across the nation. So when that really happens all the way, liquidity is going to flood into the market, and all those domestic suppliers, they're going to make a fortune. And then video games. It was a staple in kids' lives, and these companies are growing at rapid rates. No matter how much I sit here and say, oh my goodness, well, Sony dropped $500 per unit for their new PS5 or something like that, and they didn't stay on the shelf no time at all. Then they started ending up on the black market, $1,500, $2,000, things like that, because kids want to play video games. Even the big kids want to play there, and the gaming keyboards, the gaming mice, and all of this gear. People are looking at that. There's a company called Logitech. Oh my goodness, everything they make is for the gaming industry, basically, but we implement it within our business application because the rate of the milliseconds that it records data is just awesome. And every time you're looking at that, that's what you're trying to do. You're trying to say, where do I go from here? How do I do this? Municipal bonds. A lot of people are trusting the government because, woo, my goodness. In the early market, the volatility, the pandemic, it was challenging the municipal bonds in 2020. But they bounced back and they closed out the year saying that we're in a class by ourselves. So 2020 is going to bring things because many cities are still building. Many cities are still building stadiums. Many cities are still building things so that when they come out of the pandemic, they won't look and say, oh, now we got to spend another 3 years trying to build. Because one of the things that the Biden administration, even to some degree the Trump administration, they gave money freely to the 50 states. And by doing this, these high yield municipals, they going to benefit for more risk. How? They're going to favor leverage and credit exposure. And these are the things that they are doing. They are widening the spread and they are creating pockets that you could take an undervalued bond from Colorado, undervalued bond from North Dakota, and leverage it with overvalued bond from California, overvalued bond from New York, and there you are, high yield, little extra income, and all this. If you look up in the muni market, you look at ESG again, because now you're looking at environment, social, and you're looking at governance. So this is what, who's the mayor of that town? Who's the governor of that state? So you're taking all these things because now the federal government has won kudos from all sectors that the federal government can be trusted again. So then we look at those things, then we go. So you say, well, Doc, what's the main focus of any investment strategy? High quality. See, like coming on Friday nights and then reading for yourself, knowing where you are. You have to know who's managing. And then you have to know the fundamentals, the quantitative technical stuff. You got to always be able to identify high quality. You know, unless you're a penny stock person, you've got to believe in the long term. Fund has to be growth oriented. And in conjunction with that, there has to be a protection. If there ever again is anything such as a pandemic, downsizing, protection, because now we're still dealing with the uncertainty of this pandemic. We don't know what this pandemic has really done to us as an economy. We don't really know what it's done to us as a nation. We don't even know what this has really done to us as individuals. So I'm coming out of the pandemic, and I have to come out of here with a better sense of what I'm investing in, a better sense of who I am as an investor. And then I'm sitting there, and I'm serious with you now. You know, if every company is not going to be one that will say, I'm going to buy a $10 million ad during the Super Bowl to let you know that I support Black Lives Matter. Yeah, I'm going to do that. But then you could turn around and you could come in and say, well, I'll invest some into a company that not necessarily is Black Lives Matter oriented, but I can also invest in that company. Or I could do like a lot of people who do not invest at all. The only thing they do basically is that their idea of good investment is exposing a company's either their history or exposing a company mistakes they've made over the past. And then in exposing them, they're sending pretty decent companies out of business and then come up later and say, oops, I'm sorry. Because a lot of companies are trying to change their governance, but it takes years to change. And there are other companies that are never going to change, but they're out in such a atmosphere where the people who are coming on CNN, the people who are coming on Rachel Maddox or Hannity or coming on these programs, these companies are so far beyond them that they can't really stop. And the companies that you think are so fiscally responsible, the companies that you think are just such wonderful companies, it takes hundreds of millions of dollars to do the real research that you could find that. So there you are now. Those are those 8 ways of looking at how you are investing. So your investment strategy, it should take into consideration, you know, who you are, Christian, non-Christian, or who you are as a person who is racist or non-racist, a person who is conscious or non-conscious, or as the children would say, those who are woke. And by you being woke, then you could sit there and make yourself available to those things. I thank you tonight. Let me see. Do I have any questions? Good evening, Doc. So good evening, Bishop. And so the thing that happens is that's what you're looking for. You know, for instance, you know, a person like myself would say, oh, no, you know, I can't invest in cannabis because, you know, I'm a minister. And people come up, oh, man, I smoke reefer for medicinal reasons. You got so many pastors who drink hemp tea. You got so many pastors that put hemp, H-E-M-P, salves on their bodies because they claim this only thing stopped arthritis. So I'm looking up and I'm like, wow. And then, so, you know, you sit there and say, oh, I don't invest in liquor stocks, or I don't invest in this. Well, see, there are so many other stocks that you can invest in that you don't even have to sit there and waste your time in what you do not invest in. Because if you look at the things that you can invest in, then you go. Yes, you're seeing cash out. You can take cash out and you can invest in Bitcoin with cash out. Now that is telling you Bitcoin is here to stay. Yes, it's $61,000. It's one of those where a lot of people buy Bitcoin on Monday, sell Bitcoin on Friday, because you buy Bitcoin on Friday, and then you sell Bitcoin through the week when it goes up. Sometime Monday, Tuesday, Wednesday, Bitcoin is at its highest. So say, for example, if you had purchased 10 Bitcoins, yes, this week you would have made $120,000 because Bitcoin went up to $72,000. It's back down now to 61. So then you sit. Where do you sell? Oh, you sell it at 72. Then on Friday, you buy the 61. Then you sell again when it goes up to 67, 68. So you have 10. So you just made $70,000. So that is how a lot of people are making money. Well, with stocks, you are buying those stocks that pass the environment, the social, the governance. You're buying those stocks. Then you come back and you invest in municipal bonds because you're sustaining cities and sustaining states. Then you come back, then you're investing in high yield bonds that are just the debt of the United States of America, because you're saying to the Biden administration, we support you. And how we support the administration is by buying treasuries. And we're buying the debt that has been created, which is to the tune, when we get finished, going to be about $6 trillion. So $6 trillion has an interest rate. Even if it's an interest rate of 2% or 3%, that's a lot of money. I don't know if you remember that clock down around 42nd Street, when you go down and you start looking, they used to have this big clock that said, this is how much money we owe. And I haven't seen it in a long time, because we owe a lot of money, and that does not deter us as a nation to say we're a bad nation because we owe money. It doesn't deter you to say you're a bad person because you owe money. If you can handle that type of risk, then you're doing well. Well, thank you. Oh, yes. Thank you so very much. And then again, please, if you would, spend about 8 minutes over my time. But thank you. And if you would you come back and let's do this. Let's make this work. God bless you, and take good care of yourself. Yes. The Lord bless you. Thank you. God bless you.